Hey, we made it. We back.
You made it. I drove here properly.
The Elite Investor Academy and Studio Podcast. So today is a good day. Great start of the week. It's Money Market Monday. But today we want to focus more on that 9 to 5 to freedom and the
Hmm.
mindset that it takes to get to that freedom. Because everybody wants freedom. Everybody want to be able to live life on their own terms, make their own decisions, control their time, and control their income. But there's strategies to do that. There's strategies to wealth. There's keys and these little crumbs that the success leaves that you got to pick up on the way throughout your journey. And we gathered those up today, and we're going to present them to you. So I got my guy Jason. Yeah, we
I'm
from
here.
Elite Capital, kind of here to break down some of the facts, some of those steps to getting from your 9 to 5 to financial freedom. So go ahead and introduce yourself, Jason.
I am Jason Vasquez in the financial services field, but me and Ace partnered up and we are building something massive. We want to teach people how to make massive passive income. And you might hear that along the way everywhere you go if you've been searching up on Google, how do I make money while I sleep, right? People are going to be searching that up on Google, YouTube. Hopefully you come across this and you get to watch the entire thing because there's just really a mindset shift that takes place. Maybe you're so sick and tired of being sick and tired because your boss is only going to keep paying you for the job that you have.
All right.
Or maybe you're self-employed already, but you can only work so many hours, right? So, if you're a barber, let's just put that in there because Ace, you don't really need one, but I know I need one definitely.
So,
Hey, I might just make my hair like yours,
might
and be
as
gone for
well.
2 weeks.
Time
That way,
is
at least I get an even tan. No, if you're a barber, let's say you're a barber, your income is determined on how many heads you cut.
right.
Unless you own the barber shop, then that's a little different, right? Where you can charge per chair. But if you're a barber, hairstylist, or whatever, and you stop working for maybe a week or two, that absence from your business, from your whatever you're doing, if you're not cutting heads, you're not getting money. So how do you make that money turn into something? And that's what me and Ace are going to go into. But yeah,
Yeah, I mean
I come from a
that's
financial
deep. We can
background.
stop kind of right there. Go a little bit deeper into that. Just trading time for money is
Hmm.
getting from that mindset of like trading your actual time for. I mean, we all trade our time for money, but some of us get paid a lot more for our time.
Yeah.
Yeah, so we always going to be exchanging that time. It's just how much do you value your time? Some people want to get paid hourly, and then some people want to utilize a skill to make a unlimited amount, an uncapped amount of income throughout their time. So, talk a little bit about that. What's some strategies you would use to leverage your time a little bit more and not use your or not work for? I mean, basically trade that time for the money.
Well, if anyone's read Robert Kiyosaki's book, I'm gonna go there real quick. If you read Robert Kiyosaki's first book, Rich Dad Poor Dad, he talks about the difference between assets and liabilities. Assets make you money, liabilities cost you money.
Right.
So if anyone's trying to get ahead, they first need to find assets. Now, instead of spending your money, right, your income that comes in on expenses, you have to find a way to make your income produce, or sorry, income be able to purchase assets, invest into assets, things that make you money. Now, the simplest way of just conceptually understanding this is you buy property, right? This is not an investment recommendation. I have to put that out there because I'm in the financial industry. But for conceptual purposes, you buy property. You have someone rent from you. Are you there having to, work, or is that money coming in once you've purchased that property and someone is renting from you? I mean, simplistically, no, you're not there. Now, if you got to go and fix some stuff, then yeah, maybe you're working on it. But for the simple purposes, you have passive income coming in. You don't have to be there,
Right.
right? That's the simple. Now, can everyone purchase real estate? In their minds, they're probably saying, "Oh no, I can't. I don't have enough income to produce or to purchase that." But Ace and I also we have connections. We understand that there's a way that you can get the capital. So that's for another episode. But Yeah, I mean, if you want to be able to go from working 9 to 5 to becoming an investor and having that income come in, there's a few different ways. So real estate is one of them. Now we were referring to like single family. There's multifamily, so apartment complexes, or even if it's like commercial, right? Office buildings, you find people that are really gonna, or sorry, businesses that want to lock into a lease because they're serious about their business.
Right.
Well, they can rent from you, right? That's one way is to get rental incomes coming in. The second thing is, maybe you see these influencers on social media. They're saying, "Hey, just go buy the index fund, the S&P index fund." Uh, I won't go too much in the weeds on that, but that's another way that you can buy something that is growing and it grows compounding,
Right.
right? But also, you can't control what happens there. You can control a little bit more of what happens when you have rents. So, did that answer the question a little bit?
Yeah, yeah. I mean, for sure. Um, definitely being resourceful. Definitely looking for opportunities. I would say even with a 9 to 5, like even if you have a 9 to 5, I feel like the mind shift starts there. Like soon as the mindset shift starts there, it starts where you are. A lot of people
Hmm.
wait ahead to try to get to a certain place where they can start investing and start creating that
Hmm.
financial freedom. But you can start where you at, even if you have a 9 to 5.
Hmm.
Just not getting stuck in a 9 to 5 mindset.
Yes,
That's the
correct.
that's the key. Like you can have a job, you can have regular employment, and still have an entrepreneur mindset, or have a venture that's building that wealth for you and your family outside of that that 9 to 5. Like, and most people get stuck and
Yeah.
they get content in that day to day, clocking in, clocking out, and then they're done. They go and shoot the
Hmm.
shit or hop on the video games, or you know what I mean. Just
Hmm.
that other 12 hours of your day that you have. What are you doing with it?
Yeah.
And I think like creating that mindset first is figuring out like what's your actual goal and how to get there, breaking it down, and then deciding what asset class you want to be in. Because if it doesn't correlate with what your actual goal is, it doesn't really,
Hmm.
it's not going to be sustainable for you. You're not going to want to do it in the long run. It's not going to make you happy. And if it's not making you happy, it's not going to make you wealthy. Honestly, because we look at longevity, most of the things that we get involved in, if we get down the line, if we face a hard time, and we already don't like what we're doing, we're going to find a way out automatically. So
Yeah.
we always going to be looking for a way out. And so in finding that joy, finding that and what you do, and already creating that mindset, creating the habits to get you into the mindset first, and then finding the asset is what I will recommend. And once you get into the asset classes, like you said, it's a variety of asset classes you
Hmm.
can go into: multifamily, real estate. We chose multifamily, and buying businesses, private equity. Some things about that just really entice me. I've always kind of been interested in helping develop business. Me, I went to school for architecture. In high school, I took a lot of architecture classes. That was my main focus going into college. I ended up playing sports instead, which which I mean, you really can't do architecture, school, and sports at the same time. Both of those are full time jobs. So I chose football, which I mean wasn't a bad thing anyway. But it also taught me that I wanted to build with teams, and I love development. I love to see things grow. So I went into helping businesses grow, and now we're focusing on creating and building real estate, even coming from a developing level,
Yeah.
all the way up until just building multifamily units. So I mean, to each his own, but you can't beat the multi-unit cash flow or
Yeah.
the
No.
the quality of buying a asset, a real business versus buying a stock is one thing, but buying a business that you could potentially control the outcome of is another thing as well. So
Yeah. I should probably clarify on that. So it depends on how involved you want to be for better returns
right,
on that
right,
as well. And if you are trying to just be passive and you want absolutely like nothing to, you don't want to have to worry about anything, think about anything, then Yeah, you go get an S&P whatever, or work with an advisor that's going to charge you some fees, but make sure those fees are worth it, right?
Right.
But if you want to get some bigger returns that have a little bit more, you have more control over it, you can oversee what's going on, then for sure, businesses and multifamily. So I want to make sure I clarify what I was saying earlier. And I actually didn't know that about you, Ace, about the whole architecture thing. Do you remember what I was doing in high school? Because you knew me then too. It's music.
Yeah, yeah, music.
Yeah,
Yeah.
yeah. I went from music to finance. So how's that happen,
Right,
right?
right.
So
Exactly. We
yeah,
all grow up out of our phases, and then
yeah. I'm still doing it.
still do it though, because it's still a hobby. It's still something we love to do. But life gets real, and building this wealth, and then
Hmm.
going back and still being able to do the things that you love. Because I still hit the gym every day. Still, do all
I
the
can
things
tell.
I love to do. Play pickleball. All the extracurriculars and all that. But I can love it now without because I'm not focused on it bringing in income. It's not my money maker, so I can have fun with it a little bit.
I just had that conversation with you the other day. I was like, "Oh, you got passive income? Oh, that's what's up."
Oh yeah, 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 for sure. No, you gotta have it. You gotta have it. I wouldn't be here if I didn't, cause I'll be at work right now. But nah, but
Yeah,
nah,
there's a whole thing that.
building those
Uh,
things of like how. So how would
what?
you say like you got from the employee mindset? So let's say like we go throughout the four quadrants. Where are
Hmm.
you on the four quadrants? Employee, self-employed, business owner, or are you an investor?
I'm actually all for,
Right.
surprisingly. So, um, because I have certain licenses. One of them is a health insurance license, so that's the W-2 portion of it. I don't have to go hunting for the leads. The leads come in because they're calling in. I have the contract to be W-2 with the agency that I'm with. Self-employed, as a financial professional, as an advisor, that's self-employed, and the reason I'm there is because I'm still working on one of the licenses. But once I have that license, I can charge 1% a year to advise people on their finances.
Right.
So that can technically be like passive, right? Business because of what we got going on, right? So we're in business together and we're building a business. It's in the beginning, so we don't have 1,000 employees yet, but maybe one day, depending how big we want, how not how big, but how much work we want to delegate out and how much more expenses we want, and if those expenses are justified. And then an investor, of course, I have my portion of different things. Legally, I can't say what they are, but I have investments because yeah, I'm kind of all for. So I'm more in that unique category of having all four. A lot of people are either in one or two. So
Yeah, no, 100%. I mean, I made the shift through all phases as well. I started off as an employee. I didn't stay there long. I went right into the self-employed. Not really a good employee.
neither am I.
Yeah,
I'm surprised I'm still here.
I was a horrible employee, horrible student. I mean, I got good grades, but I was you know, I was very rebellious, and I think that rebellious mindset led me into being a self-employed, which I stayed there for a long time, built up until I realized that it was still working for money. I mean, still trading my time for money. I was still doing,
Hmm.
being a personal trainer. I mean, growing throughout that phase, you start to also trade time for money, more money, but it's still trading time for money until I created systems. And when I realized building systems is how you get to that business side, is where now
Yeah.
your business start to work for you, or other people start to work for you because you can be duplicated, and your processes and your operations are in place enough for you to actually kind of step away a little bit, more management side, not fully step away. You still there, you know what I mean? Because the culture is built on the business owner's back at the end of the day. But fully didn't become an investor until recently, where I could say, like you said, like have that passive income. I bought my first business and bought my first piece of real estate. And then after that, it was just, yeah, the sky's the limit. Now I'm staying within the business owner operator because we run Elite as like a business. But
Hmm.
as far as in investment, that's the category I like to be in. I like to more so put my money in, make my money work for me, and invest into systems, invest into new entrepreneurs that are coming up that are passionate about what they do, and vet them and see the be a part of things. Because I like a lot of things. I'm not one like a one thing person. Like there's not this one thing that I like or that I'm invested in. I used to be a football player, so that's all I did. And then I realized that you have to have multiple. You can't put all your eggs in one basket. And my focus, my zone in focus is investing, and then finding people like in different sectors that I can learn
Yeah.
about. I'm a full time student
Actually,
too, so
good.
student of
You're a
the game.
sponge, man. You're the muscular sponge.
Yeah, full time student of the game, man. This investing, you get a taste of everything. You get a taste of
Yeah.
um, restaurant businesses. Like, I mean, people end up finding their niche, but if you can diversify, to me, I feel like that's the best way to do it, and be aggressive with it. I mean, some people like to be conservative, but I like to be aggressive with it, especially as
Yeah, I had that conversation with you a long time ago.
oh yeah, for sure.
When you still had your gym, actually. That was when you were self-employed though, right?
That was when I was self-employed. Yep.
Yeah. Because
Oh
I
no,
remember
no,
you
that's when
had
I
all these.
that's when I was a business owner. I was managing the gym. I once I opened my doors with the gym, I stopped training completely. I probably had one or two
Mm,
clients, and then I was more of like coaching the trainers on my SOP. I had an SOP back then too, so my standard
yeah.
operating procedures where I basically had a training manual that I would put all my trainers through and give them a system on how to
Good.
train people, how to take payments, how to market themselves, and it was pretty dope. I mean, I started at a very immature age when I first started, and then I just constantly kept progressing each year. I mean, most people do though. That's how it's done.
I think you've read more books than I have, actually.
Oh yeah, I told you I'm a scholar. I'm
He's a hunk and a scholar.
going back to school for my MBA in finance now. So yeah,
Yeah. Yeah.
even though I don't have
That's
to.
pretty cool. Yeah, you don't have to, yeah. But it's cool to have letters or after your name, right?
Hey, I'll take it for sure. Trying
Yeah.
trying to take over private equity world, you gotta be some type of competition.
I want the alphabet soup. Let's go.
I like it.
Yeah.
So what uh
So
what what you think about like the financial literacy aspect? How important is that when getting over to those new tiers? I know you touch every tier when it comes to the quadrant.
yeah. So there's reasons why I'm in each tier. One of them, like I mentioned, is the contract position was a W-2, but it's more of I'm helping them, they're helping me, and the way that they're helping me is yes, I have the steady money coming in because when you're building a business, that's not steady money.
Right.
When you're building your investment portfolio of whatever it is, it's not steady all the time unless you have a bunch of rentals. But even then, you got to figure out how you're going to afford those, right? And we'll get into that. But I'm in each tier for a reason. So over here, I'm saving up to be able to get a home. Which what am I going to turn that home into? I'm going to turn into a way that I can rent it out and have some passive cash flow, so I can work less over here, but then eventually be able to go get another home. And now I can have the single family going, but then I can stack up some of that cash and I can go to a lending institution, possibly leverage it, be able to get more, and then be able to go buy some real estate, right? And some multifamily real estate, I should say. Or, there's many different ways that this can go. There's we have the way that you can access business capital with no personal guarantee on it, right? So I can use some of that money to be able to get that, and then from that be able to get the real estate or businesses or
Right.
whatever, something where I can have a little bit more control. Because I got to the point. I mean, you and I are the same age. You're just a few months older than me, right? Black don't crack, Asian don't raisin. I know. So
Right.
like we probably got to the point where we're like, we can't do this stuff forever. Can't do that forever.
Right.
Like, I mean, we probably can, but physically, can we? Sales. I'd love to do sales forever. I love talking to people. It's great. I don't like talking to irrational people, but I love talking to people that want to be helped. Right.
Right.
So basically, I can't work forever for someone else. Who am I to go and tell my family to go and achieve their goals and dreams if I don't even achieve mine, right? So there's just little steps that I purposely take. I remember, no, you beat me to it because I remember when you were still at your gym, I was trying to talk to you as a financial advisor and talk to you about like, hey, what about paying less taxes here or less taxes here? And you're like, actually, man, I'm trying to report my taxes because we're trying to get a house.
Right,
So you
right.
went and got your house, but that's kind of what has bit me in the butt before because I wasn't W-2 before and I was just straight 1099 self-employed. And then I haven't been able to take advantage of the interest rates the way they were like a few years ago.
Right.
So that's actually what came and bit me in the butt. So I'm like, all right, let me go and take a W 2. But if I'm going to take a W 2, it needs to be in something that I'm currently licensed for, something that, I don't want that license to go to waste. So health insurance. Okay, cool. And then so I negotiated. I knew the owners already. Like I figured that whole thing out, and then I'm here. So that's for the employed. For the self-employed, I got into the financial services part of it. Like I mentioned before, I want to do music, and then pretty much before I had a family, I just wanted to do music all day. But I needed to make sure I had enough money to be able to pay my bills. And I won't mention the name of the company but there was this place that I started at after I worked at the bank because you remember me when I worked at the bank, but this was afterwards. They were saying, hey, advisors that are here, within 5 years are making about 685,000 a year. I was like, to me, I'm like, okay, it's not a million, but that'll do. That'll pay my bills where I can really focus on being the producer and music person that I am. But then about a year later, I ended up having a baby. So I was like, all right, I'm already in the financial field. Let me really dig deep into this. Let me figure out how are these people doing it? Where's their reoccurring income coming from? Because they did say residual, they did say passive in the interview. So okay. So I just stuck in there because I'm like, if I'm gonna figure out how to make all this money, I need to be in the industries and follow the money.
Right.
And what are the two industries besides tech where most of the money is? Real estate and finance, which they kind of go hand in hand,
They do.
right? Unless you own a business, but even if you own a business, there's still the profit margins on a business versus in finance or real estate are different. I won't say good or bad or one's better than the other, but they're just different. And it depends on whether you're selling a service or a product. So I won't go down that way, but I chose finance
Would you
because
would you
go ahead.
would you sorry to interrupt. So
No, 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 good.
would you rather invest in a business or would you rather invest in real estate? Most people have that question about like on their path to being going to financial freedom, even if they're doing it passively, they still have their 9 to 5, but they want to invest passively. Is it more is it more profitable for them to go into a business, or is it or would you say like real estate is the way to go? To me, I'll
Go
tell you.
ahead.
I mean, I'll let you go. I'll let you answer the question. Go ahead. I asked it. Go for it.
Well, I can't say that there's a clear cut answer. And that's because first of all, I don't have the data in front of me. Second, it's it's a preference.
It
I
got to be a
honestly think
preference.
it's a
Yeah.
preference. Yeah, it's a preference on what are you comfortable with and what do you want to do. So the preferential part is, what do you want to do and then what do you want to control? How much involvement do you want? How much of it are you going to understand? So there's a few different things to really take into consideration, right? And what do we call that in the financial industry? We call it suitability, right? So what's most suitable for you as the investor? Are you the type that likes to go into the numbers of understanding a business? Maybe it's a business you're passionate about, by the way, right? Maybe if you like to work out, you end up owning a gym or something. And I don't know whether that's the right way to go or not. Ace might have a way to say about that because he's owned a gym before, but I'm just using it as an example.
I mean, I own a bunch of different businesses. I get what you're
Yeah.
saying. I would say the same thing, only that I would say start a business first. I would
And
just
why is
like
that, by the way?
honestly, personally, I just feel like the most people don't do good in real estate because they don't know how to run a business. And it's a lot like, unless you're doing it passively, it's a lot like a business. So if you actively
Yeah.
in real estate, then I would say definitely do business. Like learn business because you're dealing with contractors, you're dealing with title companies, you outsourcing a lot of these people, but you're dealing with crews and you have to be able to communicate. You got to be able to keep up with your numbers, and then at the end of
Mhm.
the day, when you finalize that that reconstruction or that renovation, you're gonna figure out if you don't want to have to use an agent, you'll have to figure out how to market that property as well. I would say real estate is way easier, way more simple and than a business would be, just because of those things that you said. The factors of if you actually like the business, you got to be able to keep up with and track with the numbers, and then you got to manage employees, and you got to manage people,
Yeah.
and not many people are good at managing people. It takes a different type of
I'm
breed to
still
be able
learning that.
to lead other people and get customers to really fall in love with your brand. So it's way more complicated, but the outcome, the results are way more substantial. You'll profit wise, if you're looking to profit, your chances is you're gonna profit more from a business.
Yeah.
If you look into now, let's say it's a different type of real estate game. You're doing multifamily now. That's ran like a business as well because now you have a property management company.
Hmm.
You dealing with that's actually managing the asset, so you are keeping up with the customers versus a single family home where you cannot have a property manager and you only dealing with one single tenant.
Yeah, I don't want to be the single landlord that has to fix toilets and stuff like that
Yeah,
and be the
yeah.
bad guy to collect rents. Like, come on.
Exactly, exactly. So yeah, and then hospitality. There's so many different things in real estate. We focus more on
Yeah.
multifamily and commercial, so it is more like a business to us. So I'm glad we did get that business experience. It pays off way more massively. Of course, the risks are higher. Anytime you get a better profit margin, majority of the time the risk is going to be a little bit higher, but it's worth it at the end of the day. For people looking to do passive income, I feel like, of course, the safest thing is real estate, but the most lucrative thing is business. So if you're looking to get tax advantages, if you're looking to stack your money into or save your money into an asset that grows at a conservative pace, then real estate would definitely be it. If you're looking to potentially be able to 10x your income, then I would say yeah, business for sure. Yeah, it's definitely your risk tolerance when it comes down to it, or
Yeah.
just invest in the index fund.
You could. Um, I have a problem with just investing in the index fund because, like you said, don't put all your eggs in one basket.
Right.
So, I still think that even though, so as an advisor, we call those asset classes.
Yeah.
So, not going to go down the weeds, but basically, an asset class is like a basket, right? So even though, yeah, you got multiple companies in an index fund, right? Let's say it's like what, Amazon, Google, Facebook, or they call it Meta, all these different companies. It's still the stock market, which is an asset class. It's still one basket. So that's why I do believe, hey, have some businesses. It's like not that are, not the ones that are in the stock market. Actually have some businesses that you're in control of a little bit, right?
Right.
Maybe you're an owner of it and now you get to, instead of managing, money, you're managing people, right? So
Right.
you're owning that. Now instead of just business, you also own some real estate because that's a separate asset class in itself. Then you have some stock market stuff. So now you have three different asset classes. If one of them goes down but the other two are up, you're in the green, basically, right? So,
Yeah.
yeah.
And I would definitely say like it's really based off your freedom number. Your freedom number is that number that is what's going to get you to that financial freedom. What are you working towards? And then you have to have a serious timeline on when you want to get there. Basically, like have a SMART goal, like be real specific and measurable and
Measurable.
attainable. Yeah, and time.
What is it? It's specific, measurable, attainable, repeatable, and what's T again?
Have a time on it.
Time.
Yeah.
Yeah, I always forget that one.
Have a timeline. So I would say definitely have a timeline. Build a 12 to 24 month plan with a clear capital goal,
Yeah.
and then create multiple streams. I love the diversification part of it. Have some cash flow, have some equity growth, and a short term, and have your little short term flips. And that's the way. That's the keys to success. I mean, it's very simple if you follow the patterns. Like I said, success leaves clues. It's not really complicated. It's really about action taking. Once you start taking action, once you decide and you create that goal for yourself, and build up the tolerance of just taking action, because a lot of people don't have that that action. There's a lot of hesitation that goes on when it comes to investing in your future because you can't see it right away.
I'll
And
say the worst decision is the one not made.
exactly, 100%. Yep.
Because you can always make a decision, and if it was the wrong decision, then at least you can adjust from there. You're already compounding the effort, because that's really what it comes down to. It's the effort, right? It's the effort. Now, if you put the effort into the wrong thing, then you just got to make some adjustments, but at least took the effort.
Yeah, put the effort and then and be consistent with that effort, because like I said, you're not gonna see it right away. And then creating that passive income, like start off like what we did, like you're saying,
Hmm.
we don't really have one an elite. We invest in businesses, we invest in real estate. We look for deals, we look for passive ways to grow our investors' money, and it's it's way more simple because we have an actual goal that we're looking to hit. And
Yeah.
and as a having him as a financial advisor, we get to actually see where a person starts from A to Z, like where are you now, and then where you want to be, and how we can structure the investment plan for you to get there,
You
as
give me
well as
too much credit. Thanks.
yeah, yeah. You know what I mean? No, so that's the biggest thing is just having that solid goal, having a mindset, having a plan, a goal, and knowing what
Hmm.
vehicle you going in. Because, like I said, you can't go to the top of Mount Everest in a Volvo. You're gonna have to take something a little bit more efficient to get to
Yeah.
the top. So just know that if your business isn't a sustainable business, or the job that you have isn't efficient enough to get you to that freedom number, then you're gonna have to make some adjustments and get into a vehicle
Yeah.
that's gonna fit those goals. Yeah, to me, that's the key, man. Just being in the right vehicle, having a destination, and then knowing what it's gonna take for you to get there, and how long it's gonna take for you to get there, because
Yeah.
we all running off of borrowed time, so we all gotta make sure that we working that time efficiently and not selling it for minimum wage.
Yeah. I think time is definitely one of the most valuable assets. And then, second to time is energy.
Yeah.
So, you know, you got to figure out what you're spending your time and energy on.
Right.
Now, this. I'm not attacking anybody, but I'm sure you've seen this, right? Where people will spend so much time cleaning the house, but that time could be used to go make money to pay someone else to clean it. So, you know, now if you enjoy cleaning the house and that's what makes your soul feel revitalized, the same way like music makes my soul feel revitalized, sure, go for it. But you asked me to do something like that. If it's not my mess, I'd really, unless you're going to pay me to clean it, you're probably going to get not the best attitude out of me.
Right.
I'd rather spend my energy because I realize the type of person that I am. My energy and my time needs to be spent on the things that either fulfill my life or make me money. It's one of
Right.
those two.
Yep. I like
So,
it. Gotta have something that fulfills you at the end of the day, and then never stop learning. One of the biggest
yeah.
things is never stop learning. Invest in yourself. Invest in books. Invest in courses. Invest in coaching, mentorship, because uh, the mind, the mind is the engine to the vehicle. At the end of the day, if you
Yeah.
your navigation to where you're going is going to start in your mind. So if you got a clear view on where you want to go, based
Hmm.
off of history, based off other people's trials and errors and their experiences, you get to learn from other people, and that cuts the time and and the hardship when it comes to really getting to where you want to be at, especially coming in as an investor. These nothing's that you buy low, sell high has been one of the strategies of of many people. So, or invest in passive income. It's so many, but it's also learning the intricate details on how and the psychology of why people do it. It's so many things that you can continue to learn in this game, and you can't stop learning. You got to continue to evolve with the industries and with with the world, with the economy. So
Yeah. I'd recommend for anybody that's trying to make passive income, regardless of where you're at in life, learn some sales, first of all, because you're going to need to learn how to make negotiations.
right,
What's that one book, Never Split the Difference?
never split the difference. That's one of my favorite
That's
books.
a,
Yeah.
yeah. So I actually ordered
Negotiations.
that one. Yeah, I actually ordered that one because I've been in sales, but as far as negotiations, I'd like to improve on that area.
Yeah.
So I do check, but learn sales, guys. And the reason I say that is because let's just say you're in sales for something passive, right? You get a little side hustle going, but you learn some sales. Use that money, save that money, put it into something that's going to grow. Now,
Right.
whether that is an index fund or you work with an advisor just for that little extra, but you stack that up, then once you have that money, you can find a way to get the capital. Now, Ace and I know ways that you can get business capital, right? Again, there's a way to get it where it doesn't affect you personally. Then you get that business capital, and now you can, you have your own business that you can now invest through. And you can now invest in other things that are going to make you passive income. But that's also where you would want to sit with either myself or Ace, where we can explain the pros and the cons, because nothing's always sunshines and butterflies, right? There's always we got to understand what you're getting into. You got to make sure it's the right decision for you, and that you don't forget specifically what we're telling you, because the reason why wealthy people have become wealthy is because they're meticulous. They're very detail oriented on certain things that matter, and it can be the make or break. What's the reason why people say that debt is bad? Not all debt is bad. There's debt that helps you get good things, right? If you need to open up a business but you need business capital, but that allows you to generate cash flow so that you can pay off those business loans later, then was that really bad debt or was that good debt because it helped you get your business going? So, you just got to figure out, you got to be smart with your money. You got to work with people like us. If you can't figure it out for yourself, and we're not calling you like illiterate or anything, but we just want to make sure a second set of eyes, a second opinion can actually help you understand exactly what you're getting into, because sometimes we're so in the moment. Yeah, let's go, go, go. It sounds like such a great idea, but you don't have either that second set of eyes or that consciousness inside of you to tell you, hey, I think you should do that. Just make sure that blah, 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 blah. Right?
Right.
Sorry, I've missed 3 calls, but they always go to my computer and it's great. I'll call them back.
Yeah. But no, I
So,
say like the main things that I want you guys to leave with today is to get to that number. You have to build. You have to have a solid goal. You have to create
mhm.
that the habits and form that mindset of fortitude. You have to partner with people. You have to leverage, and you have to create systems. And then just take that with y'all, and never stop learning. Just never stop learning. That's that's one of some of the biggest things that have helped us and are continue to help us grow as investors and as entrepreneurs in a whole is understanding what strengths we need to build up, what muscles we need to work on, and continue to put the work in and get those reps in. So, and that's how you build these guns. You know what I mean?
Those guns?
You know what I
No,
mean? Yeah, that's how you build those guns. So, yeah.
no, these guns right here, man.
Yeah, so tell them how to find you, Jason.
Yeah, you could look up just a variation, all one word, JUSTAVARIATION.
Okay, perfect. Yeah, go ahead.
Yeah, that's TikTok, Instagram, YouTube. I haven't posted on there for a while. Or just Jason Vasquez. If you find me on Facebook, it'd probably be better if you want to reach out to me on Instagram or TikTok first, because Facebook is typically people I know. But I'm more than happy to help you and answer any questions. And then, of course, you can let them know where they can find you, Ace.
Of course, yeah, just Ace Billions on Instagram. We'll be tuning in every Monday for Money Market Mondays, giving tips and insights on investing, entrepreneurship, and business scaling. So continue to tap in with us, continue to grow with us, and flourish with us. We plan on taking this thing to the top with our elite investor crew. So, yeah, man, go ahead and follow us. I appreciate y'all tapping in. Have a good rest of y'all week. Execute the plan.
Elite.